Hello, everybody. It is great to be here one more time today. And my name is Gary Fowler, and I'm the CEO, President, and founder of GSD Get You Done Venture Studios, premier AI and quantum venture studio located in the heart of Silicon Valley. A 17-time serial entrepreneur with several unicorns under the belt, including Click Software, which was sold to Salesforce for $1.35 billion. We believe that intellectual capacity is evenly spread around the world, but opportunities are not. And with that, I'd like to introduce Sumit. Hi, Sumit. It's good to see you today.
Great seeing Gary, and thank you for inviting us to your show. Pleasure to be here.
So, Sumit's a serial entrepreneur, venture capitalist, and an MBA from MIT. He's currently a partner at IHQ Ventures and Tradeback Inc., playing roles such as building a nexus of funding channel partners. Nexus of funding channel partners, due diligence of potential investments, negotiated deal closures, determining potential risks, and structuring strategic and bilateral relationships. He served as a head of the Mumbai Angel Network, and he's co-founded ventures such as Just Tap Media, a digital OOO ad tech venture, and Conjoin Consultancy. So with that, so he is the partner at IXQ, which is an MIT spin-off digital lab, inventing an efficient model to help some of the best innovators reach the world. So with that, wow, sounds like you've done a lot, Sumit. So tell me a little bit about your journey. So you grew up in Mumbai, and and you had your first company you were working for is Color Wings.
Right. So Gary, I would say I was not grown up in Mumbai, but in India because I lived in Calcutta, Mumbai, Delhi, Bangalore, and now I'm in Boston. So I would call it as like entire India. And the first company which I started right after my engineering was was Conjoined Consultancy, and that's back that in 2007. Service industry was pretty prevailing in India, and Conjoin is one of the service industry where we serve all the global investment banks like JP Morgan, Goldman Sachs, Morgan Stanley, uh, all the top 10 investment banks out in India.
Interesting.
From there,
You went to Mumbai. So you're part of Mumbai Angel Network, where you focused on sector-focused investments. So tell us a little bit about that.
that was a small stint with Mumbai Angels, where I was heading one of the verticals, which was a new initiative. They were sector agnostic investors and wanted to focus more on sector focus investments. So health tech was the first sector that I started with, and our focus was to start with more and more sectors one after the other, so that it's just not about investing in the startups, but creating a complete ecosystem for a startup. So when we talk about health tech, we incorporated with hospitals, clinics, doctors, and different health tech companies, so that if a health tech company, a budding startups comes with to us, they get the entire ecosystem benefits. They can get their first customer, they can get the place where they can do the testing, and obviously funding and advisory and mentorship.
Interesting. So why did you only stay there a year?
Uh, so it was like that. I mean, after I took an exit from my
That
last
sounds like a
startup,
lot of
I
fun.
was.
Samit, it sounds like a lot of fun to deal with those angels network. It must be really interesting, right?
All right. So, but that was for a period of 7 months before I was hitting MIT. So it was after I took an exit from my last startup, and I was moving to MIT. And before that, there was a gap of 7 8 months, and I got referred to Mumbai Angels through one of their investors, and that's how I was there.
Interesting. So you went over and you went to Tradeback. What was Tradeback all around?
So TradeBack, we kicked in TradeBack at the end of 2021. TradeBack is a specialty finance fund where we lend money to small and medium enterprise businesses globally. It's inventory backed lending that we do in TradeBack. So we understand there's a huge gap for small and medium enterprises globally, even though the default rates are low, even though they are the one who is giving 50% employment across the globe, and most of the GDP is run by SMEs, but there's a huge gap when we talk about lending. Like if you are a blue chip company or a corporate, the rejection ratios of the loans are very very low. Like it may be single digit, but wherein for SME, 50% of the loans by the banks get rejected. So that is a space where we are working and trying to fill that gap. It's a fund where we lend money to these small and medium enterprises, and for investors, it's highly secured where it is a collateralized loan. So we have always the inventory with us.
Got it. And then how did you come up with the IHQ? What did that? And by the way, what's IHQ stand for?
It's innovation headquarter, and why I started, how I started, that's my passion. I have been a three times entrepreneur in past, Gary, and I have always seen that for a budding startup, marketing is always a challenge, right? I mean, if you look at the top tech, like the best techies, best doctors, they are amazing in tech, they are amazing in building the product, but when it comes to marketing, it's like reinventing the wheel every time, right? So that's where I have run a startup which was a media tech startup as well, and I saw this challenge very very closely. That's where we came up with this idea of IHQ. uh, IHQ Ventures has two arms. One is IHQ Studio and the other is IHQ Capital. So Studio is the component where we just don't invest money in the startups. Definitely we do investments, but over that, the USP is we take the ownership of these startups marketing for entire 1 year. So just imagine if you are early revenue startups where the founder would have put in like 1.5 year, 2 year to build the product from scratch, raise some money from friends and families and their ecosystem, and put in some money by themselves. And they have now built the product which is market fit, all the testings are done. And at this point in time, the major money that they are raising is precisely for digital marketing. Like I would not say the entire, but at least 50% of that goes to digital marketing. And if you do a wrong hire at that point in time in digital marketing, your startup is gone for a toss. So that's where we come in. We bridge that gap. We take the ownership of your entire digital marketing. You don't have to hire a single employee in marketing. We have 12 people team which comes into your perusal and take right from brand building to brand communication to strategy and execution of entire campaign is done by us.
Got it. And so, do you like it? Is it interesting for you? Why did you? Are you passionate about it, or what made you decide to do it? Did you just wake up one day and say, "Oh, I want to form IHQ"?
So if you look at my journey as well, Gary, I mean, right after my engineering, I started with a venture, and after that, I did three of them and worked with a venture fund. And my interest has always lied into this. So I'm more pro towards budding startups rather than the late stage and private markets, public markets. And as you have seen the trend right now, like more and more companies are trying to stay private rather than public because there is more potential there. The moment you are public, you are in limelight, and there are so many challenges that you have to take care of that you don't focus on the business, right? So yeah, I love to work with startups, and whether it is early stage, growth stage, or kind of late stage.
Got it. And then, so you went to MIT. Now, how was that?
Oh my God. So that's one of the best experience one can have, Gary. And the program which I went for, so I was trying to, trying for IIT in India, which I couldn't crack because you can understand around a million, students apply for IIT for roughly 3 or 4 thousand seats. It's highly, highly competitive, and that kept my motion going. And after IIT, what I could see was MIT, and I tried for that. So went in there. Yep. So that was one of
I
the
have
best
a question for
experience.
Samit. What's
Yep.
better, IIT or MIT?
There is no comparison, Gary. I mean, both of them are outstanding. IIT is best in India. MIT is best in the US. So I would say both are amazing.
Which one's harder to get into?
Equally both. IIT have a lot of competitions from India, precisely. MIT has competition from all around the globe. Like in my cohort, there were folks from 56 different countries. We had amazing professors like Gary Gensler's of the world who we, took courses from. So both both are amazingly good. I would say uh, IIT is more at the fresh grads getting in there. What I experienced in MIT was like very very experienced cohort. My cohort had people who were current MDs in large banks, large investment banks, and top management in large Fortune 500 companies. So the competition is very different. It's very much a game in IIT, and it's very much very very high profile game in MIT, I would say.
Huh, interesting. And so, what do you do for fun at MIT? Like, so you go to MIT. I'm just real curious, what do you do for fun? So, what's a Friday night or Saturday night look like? Do you get out and play computer games, or what do you do? Do you have
uh,
discussions of projects, or what happens?
yeah, so I would say every week is different, Gary. And MIT is, I would say, it's a universe in itself. I haven't seen anybody in MIT who would have explored the entire MIT. Like, at any point in day there would be like tons of events going on and conferences going on and different kind of research work going on. After spending like close to 1.5 year in MIT and plus a lot of time that I even spend now, I would say I would know about like MIT like 5 or 10% of it, not much more. Even most of the professors would not know the entire MIT. So it's great place to be there, and every week is different. I would say uh, our best was to keep meeting our own cohort, spending some time creating that ecosystem, creating that network, because we were like 115 people family and with SOs, so it was a great experience there. Friday night is more of parties that we wanted to do, because after one hard week of rigorous studies and working on different strategies, different startups, different ideas. Uh, we would wanted to take a break on Fridays. So Friday nights have been like house parties generally at friends' place. And before that, yeah, they were amazing things. Like I was a part of one of the CVCs. There was a conglomerate, Peruvian conglomerate called RIMAC, and I was advising them for setting up a corporate venture capital that the company wanted to do. So I spent a lot of time doing that. So a lot of weekends into that. Yeah, so that's what it is.
No, that's great. So, how do you go down through? So, you're doing how many companies have come through IHQ so far? And what are some of the
So
results?
I Right. So IHQ is pretty new. I mean, it's an emerging fund, and we have recently set up this fund, raised some dollars, and now as we talk, we are looking at 4 companies to make investments in this current month. Uh, and when we make an investment, it's just not doing a due diligence and investing in the startup, because we before making an investment, we make entire strategy, marketing strategy for the startup. So it takes a little bit of time from our end after the due diligence process and before we make an investment, because we try to do all the TAM, SAM, SOM, and how do we reach out to the most addressable market and what should be the strategy of the marketing. So all those homework is done before we make an investment. And it's a new startup. It's a new fairly startup fund. We would make our first 4 investments this month.
Got it. So, how big is the fund?
So it's a unique structure. It's a Series LLC, Gary. It's a $75 million fund. Most of our investors are investing in every batch. So each batch has 20 startups, and each batch makes investment in 20 startups and then goes to the next batch.
And what's the average investment size?
So we do $200,000 in cash, and rest is the marketing, services that we provide for the entire one year.
And then, so you do the
So
market.
for from a startup perspective, if you see, it's easily like $250,000 to $1 million of benefits that we get in from marketing perspective and the cash component. And from investors perspective, they know that the money is just not thrown into a startup and then we have no say on that. We are completely currently working with all these startups. We are managing their marketing, so we exactly playing with the numbers, and we exactly taking data driven decisions.
And then what about the sales stuff? Who's doing the sales work? The marketing is one piece, but who's doing sales and helping them? 'Cause a lot of these startups need sales and business development. Who's helping them with that? Can you hear me?
That's a great question, Gary. I think the founders are the best people to do that, right? So at this point in time, the stages at which we are working with, these are small teams. Maybe the founders are doing the sales work, or they may have, one or two key people who are driving the sales.
But I mean, a
So
lot of
as IHQ doesn't get into the sales, we kind of help them in the marketing part.
because that Sumit, it's a big thing. I've been doing startups for 37 years. I've had 4,000 companies through my accelerator that I did in Europe, and so
Wow,
the
fantastic.
situation is, the challenge is sales is a big thing, right? They don't know how to speak. I remember when I took my course at Stanford, and basically an acting coach and a business coach were in the course so we could learn how to speak. And a lot of these entrepreneurs, about 68% of them, 69% of them, are have tech backgrounds, and they don't want to. In fact, I was just with one before we had this event today, but they don't want to do that, and so on one side of it, it's arming them with it's like having a car without gas, right? So you got to have gas. You got the marketing part, but and I'm not asking this. I'm not saying this in a negative way, but the sales stuff is so important because you're right about it. And some of the founders aren't salespeople. They don't know how to sell. And if you can't sell, you can't go out and talk to public markets about how incredible your company is. And so it's interesting dilemma, right? So and then of course operations piece is important. The sales part's important. Then the contacts and network to be able to raise money, right? Those contacts and networks. So the high net worth individuals, family offices, and fund. It's very interesting when you start to see how those dynamics start to play together. I mean, you see that at places like MIT and Stanford, where you get ultra high net worth individuals that have been successful starting to play together and use their .edu email addresses to communicate, so everybody knows you're in the secret society, right? But it's important, and we think that that's more of a laser approach rather than a shotgun. The current method of funding companies is fundamentally wrong, from my perspective. And if you jump in and you take your own money and jump in, especially like we're doing, if you take your money and jump into those companies and can get in, I'm a clinical psychologist too. So as a psychologist, you get into and I only went to my master's program. The only reason I did it is because I got a free ride. But and it was interesting. But one of the things is, how do you get to understand? It's like, I believe it's dating before you get married, right? Typically investors invest in companies. They'll meet the company 2 to 5 times. They'll invest, but they say team's number one. How can you know a team after 5 calls? You know what I mean? Or 3 calls. It's impossible. And so fundamentally flawed. And at the same time, we're driven because we have mandates to be able to invest. But the situations, you got to get to know the company. You got to understand it. How much should you invest or not? Is their stuff real or not? Right? Is it really real? Do they have all the component parts together? The team, are they playing together like a symphony orchestra, or like you said, do they need the marketing, the sales, and business development, which most of them do, right? And don't understand, but they also need the contacts to the network to be able to get it out. Silicon Valley to me is a port to the rest of the world. It's not a place, it's a mentality. And one of the
Yep.
things, the beauty of that mentality is when you're inside of it, you understand there's a lot of opportunities to be able to find those resources and things like unsupervised AR and ladder networks and variational autoencoders and those kind of things. But yeah, it's interesting. So coming up to it, I'm curious about the sales part. That it's interesting for me because it's a link that sometimes people miss. What about how do you
But
determine?
Gary, to that, I mean, I understand what you're saying, and we are totally in sync. And that's where we are trying to, cover one of the part, which is marketing, which is digital marketing, because every sales is different. Every startup will have a different sales cycle and would have a different, set of clients and different set of teams in a company. They would be approaching. So as a company, as a venture fund, we cannot do sales for them, but we definitely take the benefit of our MIT ecosystem and the connections that we have with Harvard, Stanford, Google's and of the world to help these startups grow their sales. But we definitely cannot get involved into the sales. As you rightly said, like getting to the founders, it's not very easy. Like one of the examples that I can give you, uh, uh, in past we invested in one of the startups, a health tech startup, which was started by two Stanford PhDs. And for the first 6 months we could not invest in them. They built a product, there was traction happening, but the biggest gap that we saw was the sales and marketing. Like they lack the business team actually, right? They build the product tech wise, they are amazing. They know that they knew what exactly they are doing, but the only advice that we could give them that you need a CBO, right? I mean, you need a chief business officer. And 5 6 months down the lane, they actually hired a co-founder as a CBO, and we were very happy to invest in them. So that's a gap, and a part of it is being solved at IHQ. And great input. We will look what we can do in the sales cycle as well.
Yeah, I mean the situation. So what I found, in fact, I did it myself with Eva. So my partner in Eva was David Yang. Yang's a billionaire and AI billionaire. And what happened is we came into that company. I came in as a CEO and president of the company. So he wanted somebody from the business side to come in. Um, the first MBA program was started in what, in 1908, 1906. Um, at Harvard University. It was to teach managers how to manage, not how to be entrepreneurs. Right? The whole skill set
Right.
about this thing is a lot different. So you got to go down through and building a company. I mean, risk wasn't a good thing, right? If you look at it as a manager, you want to take very minimal risk. Well, as an entrepreneur, you got to take it every day, don't you? You got to like roll the dice, and the beauty of that is entirely different mentality. So, what do you go down through when you're looking at Sumit, when you find these companies, right? And you look at it and you find somebody that's, for instance, I'll give you a direct example. And I just had one today. He's a PhD in physics,
Okay.
smart as a whip, but he can't manage. He's not. He doesn't like it and doesn't want to be a manager. What do you do when you have somebody like that's got an incredible product or service and they come to you? What do you do?
Gary, so I think what my experience have been. Product is just not the thing that can build a business, right? You could be a great techie, you could be a great doctor, you could be building an amazing product, but to be an entrepreneur, you need to have certain other different skill sets, like which is entrepreneurial mindset, how much of pressure you can take, how much of management skills you have, how mature you are. So those are basic stuffs that we would definitely look at first. Like when we look at a company, the basic parameters that we look at is obviously the founders, their fraternity, if they have been a founder in past, or how entrepreneurial they are. So those are the basic checks that we see from the founder's perspective, and then the tam sam sum of the product, and then how's the product, right? If there's a demand in the market, if it is actually solving some problems for consumers. So as we focus majorly on fintech, health tech, and consumer internet, we always see that it is solving some of the issues in these sectors. Otherwise, when I say consumer internet, you should be using tech to add some convenience to users' life, right? To your consumers. So three things that we definitely look at. So even if the founder is great as a techie, but he doesn't have a complementing co-founder to run the business, it's not going to work out. So all the advice that I can give to this ex-founder that you're talking about is like, partner up, right? Partner up and get another founder, maybe who is great in business and you are getting tech. That would be a great combination.
Now, who leads the company? Does the technical founder lead the company or the business person lead the company?
Uh, Now, today's world, I would say there are several tangents to the company, right? It's not about leading the company. It's not the juggle to become a CEO or CFO or CTO. Uh, every position is equally important and equally, strong enough. So all the three designations I'm talking about are equally important. If you don't manage the cash flow, you are gone for a toss. If you don't manage if your tech is not smart enough and abreast, you are gone for a toss. And CEO manages the overall cycle. So I think all of the three are other pillars.
Yeah, you're right. Well, it's part of it's a team, but you need somebody that can lead it too. You got to have the compassion and the empathy to be able and desire to be able to lead. It's important. I had a four-star admiral that was on the show, and I asked him the question, Samit. I said to him, how do you become a four-star admiral? He's the number two guy in the U.S. military, and he said, I said, what are the characteristics? And he said, compassion is the most important
Right.
characteristic of leading. And I said, well, what do you mean? He said, when they had Operation Desert Storm, he was a person that was running the Sixth Fleet and he was on an aircraft carrier. And he said, a tear came down my eye when I was sitting down, uh, waving off the pilots that were going to be flying because I knew that 10% of them wouldn't come back. And I would have to write their wives and their mothers and
Wow.
their kids and tell them. And he said, fortunately, nobody got shot down, but he said, and made him feel good. But he said, you know, uh, people have to know that you truly care about them. And it's interesting, different school of thought, but I think it's right on target. It's interesting. So, what do you
100%.
do? So, in terms of how do you find those companies, Sumit? What's the best way to find them? Do you just go to students at MIT or professors, or how do you find the companies?
Yeah, definitely. We take the benefit of the MIT alum ecosystem. There are enough budding startups coming from MIT. We have Delta V's of the world, which is happening every year. So we keep a very close eye on the startups coming out from there. And then we have a large, alumni network through which we definitely target startups. But that's not all. We have partnered with most of the accelerators and incubators in the US. Like we keep an eye on the YC startups from Techstars and FI. So we are also working very closely with International Federation of International Association to start a chapter in Boston. So all these ecosystem really work, and we get enough deal flows from all the networks that we have built so far.
Got it. No, it sounds great. So, we're coming up to the top of the show. Closing thoughts, Sumit, and how do people get a hold of you? If there's startups out there that are interested in working with you, how do they get a hold of you? So, closing thoughts and how do they reach you?
So closing thoughts, Gary, I would say, I mean, as I open any of the social medias, whether it is Twitter, LinkedIn, or something else, I see people talking about all the top tech companies, all the CEOs. This CEO tweeted this, and this is what XYZ company is talking about or doing. So every time you see that, people are talking about Tesla, Google's of the world, and my suggestion is, like, let's not just keep talking about them. Let's start associating yourself in one of the unicorns of the future, budding startup that you think could be a unicorn of the future. Be a investor, be a mentor, be a part of the startup some or the other way. So get associated with these startups. Reaching out to us, the easiest way is email us, or I'm very active on LinkedIn too, so that goes easy. My email is sumit at ihqcap.com.
That sounds great. Sumit, thanks for taking time in your busy schedule to join us today. It's appreciated. And thanks to all
Thank,
my for joining one more time. GSD Presents. Um, you were going to say something, Sumit?
thank you so much, Gary, for your time. And thanks, Jane, for coordinating this. Thank you so much.
Yeah, thanks, everybody. Take care, stay self, stay happy, stay safe, and stay healthy. My name's Gary
And
Fowler,
stay warm.
and I'm the host of GSD Presents. Yes, stay warm because there's a blizzard coming, some cold weather
Right.
up north. I'm in Florida right now. It's kind of warm down here, but anyhow, take
You're at
care.
the right spot.
I'm in the right spot. Take care, everybody. It's good to see you, and we'll see you again
Good
next
day.
week for
Bye
another
bye.
exciting edition. Bye.